This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through all the business news stories you need to know about from the continent and beyond. But first, a run through the markets. We start in East Africa. In Nairobi specifically, investors didn't really seem fazed or mind the fact that a consortium Safaricom is part of won a 15-year operating license in Ethiopia, but they cannot roll out mobile money services immediately. The firm shares, however, did essentially hit all-time highs, went as high as 43 shillings and 10 cents a day, but they did close 2.4% higher, 42 shillings 75 cents a share. In banking, NCBA reported a 74% rise in net earnings for the first quarter. Loan loss provisions declined by nearly a third to about $24.4 million. But remember, that's coming off a relatively low base. Mining majors BHP, Anglo American and Sibanye dragged the all-share at the JSE lower today, with all of those shares falling by over 2%. Here's what's coming up tonight. Kenya's leading telco unveils the shareholding structure of its Ethiopian operations. The US lifts a ban on tobacco imports from Malawi. And Eurozone leaders admit Brexit is still a source of tension between the bloc and the UK. We start the program tonight here in Kenya, where the telecommunications giant Safaricom is set to own a majority stake in a series of companies formed for its entry into the Ethiopian telecommunications market. The NSE-listed firm disclosed the new operational structure for the consortium, which won a license to enter the new market at a cost of $850 million. Japan's conglomerate, that's the Sumitomo Corporation, is the second largest investor there with a 27.2% stake. It's followed by the UK's sovereign investment arm, if you will, CDC Group, and South Africa's Vodacom Group with 10.9% and 6.2% respectively. Vodafamily Ethiopia Holding Company, which is incorporated over in England, will own the Netherlands-registered Global Partnership for Ethiopia. GPE will in turn own a new operating company in Ethiopia, whose license will run for 15 years with the right to apply for an additional 15-year operation window. Safaricom and partners are expected to commence commercial operations in Ethiopia in 2022. Elsewhere, Nigeria's central bank held its benchmark policy rate for a fourth consecutive meeting on Tuesday. This comes as it tries to support the country's fragile growth, fragile recovery, while also figuring out a way of combating rising inflation, if not entirely ignoring it altogether. The Monetary Policy Committee kept the policy rate unchanged at 11.5%. That decision it was held by all 10 members and it was unanimous. That's a change from March, when 6 members of the MPC favoured a hold, 3 voted for a hike of 50 basis points. The MPC cut the key rate by 200 basis points in 2020 to support Africa's largest economy against the impact of the pandemic and a plunge in oil prices. That said, GDP still contracted by the most since at least 1991. And while Nigeria has just barely emerged from a recession in the final 3 months of 2020, data out on the 23rd of May showed that the rebound is still very, very fragile, with first quarter growth of barely 0.5%. All right, then let's examine this in a bit more detail. Deji Badmos joins us now live from Lagos with a bit more information on the story. So Deji, let's start with the rate question first, because rates have remained relatively low for a fairly long period of time. But is that then translating into the real economy? Is it actually achieving its intended objective of making it easier for business people to get out there and get onto the business of commerce?
Well, you look at the figures. I mean, there's a temptation to think that the money is certainly it's like it's not cascading, if you like, but indeed you need to disaggregate the figure. You take a look at the figure released by the NBS, that's the National Bureau of Statistics now. When you disaggregate that figure, look at manufacturing, for instance. Manufacturing witnessed quite a surprising growth of 3.4%. In the last quarter, it contracted by 1.5%. Now, that is a big surprise because despite the challenges that manufacturing faces in this country, we're seeing growth. And that is attributable to the fact that they have access to funds, apart from what they get from deposit money banks now. There's also support coming from the central bank as well. The central bank with its COVID-19 stimulus intervention, it says it has supported about over 70,000, for instance, companies or manufacturing concerns now in this country. And the central bank would tell you that's the reason why you see manufacturing appears to be on the path of growth. I mean, same goes with agriculture. The CBN, for instance, has what it calls the Anchor Borrowers Program, where it gives money to farmers to farm. We also saw growth in that area, despite the security challenges in the country, and despite the fact that farming has been seriously affected by banditry, especially in the north of the country, that is more like the food basket of Nigeria. So somehow there is still that trickle-down effect. Businesses are getting access to loan, but maybe not as much as a lot of people would want to see it. And some people will tell you that, look, especially with deposit money banks, that it would be nice if the rates could even come down lower than they are at the moment. But somehow, access has no doubt improved. There is access, and businesses, some businesses are actually getting loans, and they're doing well with the money.
Okay, so headline inflation, though, and I'm glad you brought this up in reference to the incident of banditry, essentially, that are affecting farmers. Headline inflation has got up by nearly 600 basis points in the last 12 months. From April 2020, it was around 12.4%. March, it was 18.2%. What's the inflation trajectory that the MPC is expecting this year, and what's informing that trajectory?
Well, the MPC expects inflation now to moderate to somewhere maybe around. I remember the last MPC meeting, the projection was that they expected inflation to moderate to somewhere around 15 or 14%. But of course, you look at what is going on at the moment. It's a difficult call to make, even though we are seeing some kind of moderation now. I mean, the last inflation figure, of course, we saw a slight decline to 18.12%, but that's quite marginal. And the challenges, of course, are still there. Food inflation is still quite high. It's a problem. So the CBN is still quite optimistic that we're going to see some kind of moderation, but it's made it also clear that, look, the government needs to deal with the issue of security in the country, especially in those farming areas. I mean, where agriculture is the mainstay of the people, especially in the north of the country. So that if the government does not come to grips now with the security situation in the country, especially in the north, we might see inflation still bounce back up. But what we're seeing now, it's true to the CBN's projection. We're beginning to see some kind of moderation in inflation. But how low it will go, it's a difficult call to make at this moment. And the kind of decline we're seeing, whether we're going to see a steep decline, we have to wait until the next figures are out, and then we'll be able to make some kind of projection. But of course, the CBN is quite optimistic that there will be a moderation without actually stating, essentially any figure at all.
So the CBN has also been gradually weakening the Naira since February, but it seems to have essentially stopped, for the time being anyway, at around the 410, 411 level on the NAFEX window. Did the MPC, did the governor elaborate on the trajectory they have to gradually have the Naira rate converge into having a single rate for the market instead of the multiple ones that we have now?
Well, the CBN governor did talk about it. As you know, of course, you go to the CBN website now, what you have is the NAFEX quote. So it's like the CBN has actually adopted the NAFEX rate now at the official rate of the country. And the CBN governor did talk about that the CBN was adopting that. That's the NAFEX window now at the official rate of the CBN. In terms of what happens in the parallel market, the CBN says it is not looking at that market because the market is actually not deep. and that market should actually not be dictating what the rate of the country should be. But the CBN says it is now effectively working towards what you would call, well, what you have called, you know, a single rate, if you like, which of course the IMF and the World Bank have actually been harping on for a very long time, and I think is one of the reasons why the CBN is actually doing this. But the CBN governor still insists that the country actually still runs a managed float, not a free float. I know you've actually been talking about the need to run a free float now for a very long time, but the CBN governor insisting that the country still runs a managed float, and that the official rate at this moment, of course, is the NAFEX rate. And don't forget, by adopting the NAFEX rate, what the CBN has done is to effectively devalue the Naira by about 7-point-something%. So this is another round of devaluation. And now, are we going to see more devaluation in the coming weeks or months? We do not know. We just have to wait and see. But I do not think the CBN would want to you know, react now or carry out its actions now based on what happens in the parallel market. The CBN governor has said that will not happen.
Indeed, slow and steady as far as the managed float is concerned. Deji Badmus in Lagos. Thank you. Well, still in Nigeria, the country's economic output grew by 0.5% in the first quarter, lifted higher by crude production and oil prices. It's according to the latest data set from the country's statistics agency. Africa's largest economy did exit its second recession since 2016 in the fourth quarter of 2020, despite a full-year contraction in that year. As Deji Badmus now explores from Lagos, the country was already grappling with low growth even before the pandemic triggered a recession and created huge financing gaps, including some pretty serious dollar shortages and sky-high inflation.
The data is clearly an indication that Nigeria's economy is growing, albeit very slowly. The National Bureau of Statistics says though the 2021 first quarter growth rate was slower than the 1.87% growth rate recorded in the first quarter of 2020, it is higher than the 0.11% recorded in the fourth quarter of 2020. The key driver of the growth is the non-oil sector, which grew by 0.79% in real terms.
The impact may not be significant, but what is important is that we are still in a positive growth territory. And when we talk about a GDP growth performance of less than 1%, which is what we have, it shows that the economy is still struggling to recover from the shocks of the pandemic and even the recession that followed the pandemic.
The growth in the non-oil sector threw up surprises. It was mainly driven by the manufacturing, agriculture and information and communication sectors.
The first surprise has to do with the performance of the manufacturing sector, which posted a GDP growth of 3.4%. In the last quarter, before the one that was reported, I'm talking of Q4, it recorded a contraction of 1.5%. And given what we know about the manufacturing sector, about the experiences that they have had in the last 1 year, especially around the foreign exchange liquidity, around the challenges at the ports, the purchasing power, the inflation, and the security. We never expected that we can have such a significant growth number from the GDP.
Growth in the oil sector was still negative, but the level of contraction in the first quarter is a far improvement from that of the last quarter of 2020, as oil production increased to 1.72 million barrels per day over the 1.56 million barrels per day recorded in the first quarter of last year.
So this contraction is high level of improvement, and it reflects what is going on around global oil prices till this moment today. So I would say that while it's still in the negative territory, it's a significant improvement for Nigeria. And it also means that it's very hopeful that Nigerian authorities will not complain in terms of revenue generation like it was done in Q4 2020.
Then it's also a bit disturbing that some sectors have remained in recession, particularly the hospitality, recreation and entertainment sectors. they are still practically in recession. In this latest figure, they still posted a negative GDP growth. Hospitality posted a contraction of about 4.6%. The entertainment and recreation sector also posted a negative of 1.3%. This is very disturbing because these sectors have been down for over a year.
With Nigeria's population growth rate estimated at around 3%, economic experts say the country needs GDP growth rate above that figure for serious economic progress. While the IMF projects a 2.5% growth rate for the country in 2021, the government's forecast is 3%. But if the latest GDP figure is anything to go by, the government has its work cut out to sustain and increase the tempo of growth in the economy to anywhere close to the figure it envisages. Deji Badmos, CGTN, Lagos, Nigeria.
Let's move on to South Africa now, where the country's Public Enterprises Ministry says that the struggling state utility, Eskom, has managed to reduce its mountain of debt by almost a fifth over the past fiscal year. According to Pravin Gordhan, the minister in charge of that ministry, the debt load reached a high of over $35 billion in the 2020-2021 fiscal year. But by the end of March, it stood at roughly $29 billion. That's due to a mix of repayment of mature debt and also changes in the exchange rate. Eskom achieved savings of about $975 million over the financial year. The utility supplies over 90% of the country's power needs, but it's been struggling to meet demand for a couple of years now. Eskom's troubles have long cast a shadow over Africa's most industrialized nation, with ratings agencies citing its debt as a key risk to an economy struggling to rebound from recession. In the meantime, credit ratings agency S&P Global and Fitch have maintained South Africa's credit rating at 3 notches below investment grade. Both agencies affirmed South Africa's sovereign credit rating at BB-. S&P kept its outlook at stable, signaling that it doesn't expect any change in the near future. Fitch, on the other hand, kept its outlook at negative. That essentially means the next move is more likely to be down rather than up, as CGTN's Angela Coppola now explains.
Fitch has also affirmed South Africa's long-term foreign and local currency debt ratings at BB-. It maintains a negative outlook. The decisions didn't come as a surprise.
Largely, that's because things have improved on the fiscal front. And on the growth front. So growth has been contracted less than expected, and it looks like it's going to rebound by more than expected. And over and above that, we saw revenues come in a whole lot better than expected, and also Treasury overissued.
There have been some tailwinds that have helped South Africa's case, most obviously a return of appetite for emerging markets and specifically commodity price buoyancy. I think that's played in our favour.
National Treasury raised over 100 billion rand, but there were concerns about where that cash would be used.
They're using that cash to pay down debt, which means our issuance this year has been reduced dramatically and far more than investors had expected. And this is important, one, because it gives Treasury credibility, which it desperately needs, and two, because it brings down, because you've got less supply from a supply-demand dynamic, it means that your debt service costs are coming down.
In the short and medium term, there are 2 issues that need to be dealt with. Public wage increases need to stay below 2%, and public debt must be stabilized.
And we're given no indication of how we get from 2023-24 to debt stabilization. It's not clear to us. So that needs to be clarified. And I think once that's done, it could be quite positive for GDP growth.
The rating agency's announcements are helpful in another way.
We know what needs to be done, and we know where the ratings agencies stand. For the economy then, and for investors, for confidence, I think that is helpful. There's nothing in it, to me, that translates into reasons for optimism or buoyancy, that we could take confidence or clarity or direction from it, but certainly not optimism or buoyancy.
Analysts are saying there's enough policy in place. It's now time for implementation of those policies so that the country can begin to grow and pay off its debt. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
All right then, so in those last two stories, we've looked at the headline issues, the macro level issues in South Africa. But on a micro level, at an individual or household level, some interesting changes have happened in spending patterns over the last year. The imposition of pandemic restrictions essentially pushed a lot more individuals to spend their money through digital platforms, to essentially move away from cash, if you will. But how exactly did this happen? Who are the winners and the losers? And where does the market go from here? Let's explore that in a bit more detail. Gabriel Swanepoel is the President of Business Integration at MasterCard South Africa. He joins us now live on the program. Gabriel, thank you for your time. So South Africa is an interesting country. It's got relatively high levels of financial inclusion. Roughly 80% of adults have a bank account. But before the pandemic, there was a very strong preference for cash. Why was that the case, and how has that changed since March 2020?
Good evening, Ramah, and thank you for having me. Pre-pandemic, around 60% of total volume of consumer retail payment in South Africa was cash-driven. And from the consumer's perspective, the perceived benefit of using cash is largely driven by the misconception that cash is cheaper, when in fact it costs the South African consumer around 23 billion rand per annum. So what we saw with the pandemic is a real uptake around digital payments. And in a consumer poll that we did last year, 44% of South African respondents said that they've reduced their use of cash, while 20% say that they do not use cash at all since the pandemic began. So, and there's also the whole idea around the cleanliness of cash. 87% of the respondents are concerned about that and would rather have a touchless interaction at the point of sale. So as a result, we've seen just a myriad of new innovations come into the market from the broader industry. And some of those, have been a shift to contactless payments. 3/4 of the South African consumers say they are now using contactless payments, which is a more clean and safe mechanism of effecting payment.
That 23 billion rand figure, break that down for us, because I know the industry term that you use is essentially the cost of cash, which for the layman who might be watching this might not necessarily make sense. But break down that number for us. Why is it important?
So, if you can break it down into direct costs, right? And the direct cost would be to the consumer things like ATM fees and point of sale and the cost of withdrawing cash when you're at the retail point of sale. But there's also indirect costs that needs to be taken into consideration, like travel, time, the time-related costs, foregone interest rates, theft, cash in transit costs, things like that.
Okay, so there was a near 70% rise in online shopping spending in South Africa after the pandemic hit. But the thing I'm curious about, though, is how much of that growth originated from social media channels? In other words, if someone was browsing for something on Instagram or Facebook or WhatsApp, for argument's sake, at what point did that then translate into a sale that essentially was paid for online?
That is it's an absolutely phenomenal number if you think about it. It was online retail grew at 66%, and it more than doubled in the last 2 years to now represent 2.8% of total retail sales in South Africa. And this is just phenomenal growth, and we expect to exceed a 30% growth number in 2021, reaching 4% of total retail sales. So it's picking up phenomenally. In terms of the point of interaction, I think that what we saw a proliferation of traditional e-commerce checkout, but also what we would deem where the card holder or the consumer is not present, and those would include the channels like through mobile web checkout and scanning of QR codes and so on. So if you juxtapose that number with what we've seen within the online space, traditional retail actually slumped. It slumped by 4.2%, which is just in stark contrast to the phenomenal growth in online. And then, the takeaway here is to say, well, if all of this is true, what can we expect to see being habits in perpetuity over time? And we expect 71% of consumers to continue the new online habits across all of those channels that you've mentioned, as online, post-pandemic when the world normalizes again.
Would I be accurate to suppose, or rather to forecast, that perhaps the biggest beneficiaries of this switch to online payments were informal enterprises?
I don't think it points directly to that. In fact, I think one of the surprising factors for us was that online shopping has normalized across the age groups. I think that traditionally there was always a perception that it's more the youth that participates in online payment, and we have seen normalization across all of the age groups up to adults of 64 years of age, and it just means that with age no longer being a defining factor in online shopping, it would be fair to say that wherever there's touch point for digital transactions within the online space, you will see the transaction volume coming through.
Okay, so one of the other things that I found interesting about the work you're doing in South Africa is that you've focused on QR codes as a means of payments across South Africa, growing that particular payment channel with a focus on SMEs. What's the uptake like so far, and how do you see that market segment growing?
QR payments is just an interesting form factor from a MasterCard perspective, which we started to deploy, and is really helping us achieve our new milestone of reaching 50 million businesses within the SME sector. And QR, as opposed to near-field contactless, when you tap your phone at a traditional point of sale, is a much more cost-effective way of deploying a digital acceptance infrastructure for retailers and merchants of all sizes. And the way that it's grown across South Africa is exactly that. Within the different merchant categories, be it seasonal merchants, be it the kind of mobile merchant, if you want, within the market and bazaar kind of environment, the informal marketplaces that you spoke about earlier. And there was a study done by a gateway provider in South Africa called PayFast, which from our MasterPass product proposition in South Africa saw an increase of 412% between March of 2020 and February 21. So it's just an absolutely phenomenal growth within that space. And in terms of actual numbers, it was an increase of about 40,000 merchants just within that environment since the start of the lockdown in South Africa around the March period of 2020.
Okay, one last question for you. So back in 2019, before we are all, when we didn't know there was this thing called COVID that's going to hit us all, back in 2019, you flagged the existence of different standards on QR codes, on NFCs, as being obstacles really to the interoperability of payment systems. 2 years on, we've seen this huge spike in payments being made, essentially cashless payments being made by consumers in South Africa. But has that interoperability and standards problem been solved?
Yeah, so from a MasterCard perspective, if you look globally, we very much subscribe to the EMV, the Europay, MasterCard and Visa standard that was promulgated some years back in terms of QR code payments. And within the broader South African ecosystem, there has been proprietary operators that has deployed QR codes in market. But we all fall under the regulatory body in South Africa called PASA. And from a PASA perspective, there's currently a work being done that's underway, a project underway to adopt that standard. And as that standard is adopted within the South African context, so MasterCard will fall in line with local regulations. But across the continent, from a QR deployment perspective, we follow the EMV code standard.
Okay, we'll leave it there for the time being. Gabriel Sanapol, President of Business Integration, MasterCard South Africa. Thank you for your time this evening. Time now for a run through some company headlines. Let's start in India. The country's largest metals producer, Tata Steel, has announced that it will continue to pay monthly salaries to the families of all employees who died because of COVID-19. The steel manufacturer will continue to pay those salaries until the age of retirement, which is 60. Every month, the deceased employee's family will receive any amount that would be equal to the last salary the employee had withdrawn before their demise. Along with their salary, Tata Steel will also provide medical benefits and residential facilities to the families of the deceased. Crown Paints, a major paint manufacturer in Kenya and East Africa, is in the process of issuing new shares through a rights issue. The firm aims to raise about $6.6 million by issuing over 70 million new ordinary shares. Crown Paints says that the funds will be used to lower its debt, which has risen beyond sustainable levels. The manufacturer will also invest some of the funds in expansion projects in an attempt to grow its market share in East Africa. Kenya's telecommunications giant Safaricom shareholders Paper value essentially went up by $837 million on Monday and came as investors rushed to buy the company's shares after it secured a license to get into Ethiopia's underserved telecommunications market, effectively ending a monopoly that has been there for the better part of a century. This marks one of the largest one-day gains on a single stock in the history of the NSE. Safaricom share price closed at an average of about 39 US cents a share from Friday's 37 US cents a share, giving it a market value of $15.5 billion US dollars. And finally, Bernard Arnault, the CEO and majority owner of the French luxury group LVMH, briefly surpassed the Amazon founder Jeff Bezos to become the world's richest person. According to Forbes, Arnault claimed the top spot with a net worth of $186.3 billion, surpassing Mr. Bezos, whose net worth stands at $186 billion. The French fashion tycoon has added over $47 billion to his net worth so far in 2021. He oversees a company that runs 70 brands, including Louis Vuitton and Sephora. That's a run through your company headlines. You're watching Global Business Africa. Time for a short break. Here's what's coming up. The US lifts a ban on tobacco imports from Malawi. And Egypt's parliament approves a cabinet decision to raise the minimum wage and pensions. Details coming up shortly.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Tunisia. Hello, Naro.
This is how all stories begin. See how they end. Only on Global Business.
Welcome back to the program. The US government has reviewed import restrictions on tobacco imports from Malawi. Back in November 2019, the US government announced it had suspended all imports of tobacco from Malawi over child labor allegations. That ban followed a decision by human rights lawyers to bring a case against British American Tobacco in the High Court in London over child labor in Malawi's tobacco fields. In the case, lead day lawyers are acting for nearly 2,000 claimants. That's both the children involved and their parents. And they expect that up to 15,000 more will join the case. A statement issued by US Customs and Border Protection says that effective May 21st, however, certain tobacco products from Premium Tobacco Malawi Limited will be admissible at US ports of entry. Egypt's parliament has ratified a cabinet decision to raise the minimum wage and pensions. Public sector employees could see their minimum wages go up by around 11%. Pensioners may see their dues go up by 13%, in addition to an average annual raise of anywhere between 7 to 10%. That decision would be applied in the new fiscal year, which starts on the 1st of July. Here's CGTN's Yasser Hakim with the details.
Abdurrahman is a logistics officer at a state-owned petrochemicals company. Married with a child, he welcomes the new minimum wage.
For sure, it will make difference for me, for my family. For example, if the limit was 2,000, and I am ready to make my budget for my life, for my lifestyle, to get some things. So sure, it will be increased for lifestyle, for my child, for medical, for everything. not only for food.
The new minimum wage is $154, up from $128. It also comes with an 11% annual salary raise and bonuses for all civil servants. There's a 13% increase in pensions as well. 16 million people will benefit from the new scheme.
This decision will help a lot of Egyptians to keep and to be capable for the lifestyle, and also to get their needs and their wants. Encourage all youth to work, and also will give them hope that the things will be better in future.
Aware of the huge burden civilians had to carry with aggressive 5-year austerity measures, followed by a COVID-19 induced recession, the government has doubled funds for social welfare programs too.
There is around $2 billion in the new budget to help citizens sustain the latest economic effects, like the Takaful Karama program launched by the president for the unemployed and low-income earners, as well as Dignified Life program to develop poor villages.
Raising minimum wages and pensions for the next fiscal year are costing the government about $5 billion.
The state budget has an average annual deficit of $25 billion, and lately, because of the coronavirus, revenue has been lower. The funds are coming from state budget and will cover through debt instruments, local and international. The government is targeting around $63 billion in the next fiscal year through foreign currency bonds and through treasury bills from local banks.
The latest salary raise applies on civil servants because the private sector has asked for a rain check. Most businesses say they're still recovering from the economic fallout of the coronavirus pandemic and cannot afford more expenditure at this point. Yes, Hakim for CGTN, Cairo.
Zimbabwe, in the meantime, has suspended maize imports, citing a big harvest of that staple crop this year after years of food shortages. The Southern African country last year spent some $300 million on maize imports, and donors were feeding more than half the population due to successive droughts. According to the government's latest crop and livestock assessment reports, the country will harvest 2.7 million tons of maize in the 2020-2021 cropping season. That's 3 times more last year's output. It's more than the country's annual consumption. It's also the highest yield in 20 years. Zimbabwe's maize harvest will be nearly 200% higher, in fact, than last year, on 130% above average. On to North Africa. Tunisia's prime minister has paid a 2-day visit to Libya to relaunch economic cooperation between the two neighbouring North African states. Leaders from both sides signed an agreement on promoting mutual trade and facilitating easy movement of travellers across their respective borders. From Tunis, CGTN's Adnan Chouachi.
Tunisian Prime Minister has announced that his government is ready to support Libya in its reconstruction process. Hisham Mishishi welcomed Libyan government's willingness to further enhance bilateral relations and resolve the issue of Tunisian labor in Libya. He expressed his willingness to lift restrictions on the movement of goods and people across the two nations.
We have agreed to push for more investments in all fields and to lift all legal and administrative barriers. Tunisia will share all its experience and expertise in training, administration and infrastructure available to Libya. Libyans enjoy a very special place with their Tunisian neighbors. Tunisia is also committed to freeing up trade and facilitating mobility with Libya.
The Prime Minister of the Libyan National Unity Government, Abdelhamid Beiba, said his country will not abandon Tunisia in the face of the COVID-19 pandemic, which has battered its economy, and will undertake all necessary steps to support it.
The region and the world are going through hard times. Today more than ever, our two countries need each other, especially since Tunisia has always provided great support and stability to Libya during its political crisis. Tunisia has served as a land of refuge for the Libyan people during the worst periods of war and armed conflicts. Libyans were treated in Tunisian hospitals and housed by Tunisian citizens.
More than 1,300 Tunisian businessmen have accompanied the Prime Minister to Libya. They are taking part in the first edition of the Tunisian-Libyan Fair and Forum of Economic Twinning for Africa. 150 Tunisian companies are participating in the exhibition in Tripoli from May 23rd to 26th. At the same time, Tunisian authorities have lifted restrictions preventing Libyans from acquiring property in Tunisia.
Together, we'll build a strong and unified economy between Tunisia and Libya that will have advantages for Tunisians and Libyans. This exhibition shows the great potential of our companies in several sectors. We have decided to treat any Libyan national like a Tunisian citizen.
The Tunisia Africa Business Council announced that Libyan and Tunisian investors will have the same advantages in both countries in terms of investment, right to ownership, and bank transactions. National Carrier Tunisia has resumed flights to Tripoli. It is the first company in the world to have resumed operations in Libya. In addition, Tunisian and Libyan prime ministers have signed an agreement to develop and promote sea and land trade between the two North African countries. Adnan Shawishi, CGTN, Tunis.
It's 18:40 GMT, time for a short break. Here's what's coming up. Eurozone leaders admit Brexit is still a source of tension between the bloc and the UK. And China's tightening regulations on live streaming e-commerce. Details coming up next.
Accra is my kind of city. That's because when I'm here, I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in.
Business in Africa is high risk.
After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town, and I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Ucheo Koronkwo, and I'm a business anchor and reporter at CGTN.
Welcome back to the program. These are some of the stories making headlines at this hour, starting in Mali. The country's interim vice president, Colonel Assimi Goïta, says he has seized power. Goïta says the transitional president, Ban Dao, and the prime minister, Mokhtar Wan, failed to consult him about the formation of a new government. The two were arrested and taken to a military base outside the capital on Monday evening. They were in charge of a transitional government created after a military coup in August that ousted the president at the time, Ibrahim Boubacar Keïta. Now, geologists say that an earthquake with a magnitude of 5.3 on the Richter scale has occurred between the border of Rwanda and the Democratic Republic of Congo on Tuesday. That tremor poses a threat of another eruption. Over the weekend, catastrophic volcanic activity at the Nyiragongo Mountains released lava and toxic fumes. It led to the deaths of 32 people and the displacement of close to 25,000 others. And finally, the Israeli Prime Minister has warned of a powerful response if Hamas violates a ceasefire over Gaza. Benjamin Netanyahu made those remarks following a meeting with the U.S. Secretary of State Antony Blinken. Blinken is on a regional tour in hopes of bolstering a truce that ended 11 days of conflict between Israel and Gaza. He has also vowed to rally international support to speed up humanitarian aid to the Palestinian enclave. That's a run through your headlines. Now then, let's head over to Europe. The EU says that tensions with the UK are not due to the agreed Northern Ireland Protocol, but from Brexit itself. At an EU summit, the bloc's executive head, Ursula von der Leyen, said that the full and correct implementation of the protocol is the only possible way to keep the integrity of the EU single market and peace and stability in Northern Ireland. Now, this was agreed to by all 27 EU member states. She stressed that any problems that arise are caused by Brexit itself and not the current protocol. At the same time, new figures show that overseas visits to the UK were down 73% in 2020 compared to 2019 as a result of the pandemic. Foreign visitors spent 78% less. This comes as a campaign to boost domestic tourism in the UK this year is rolling out, promising special cultural events and the prospect of being able to visit the country's top museums and galleries without the usual lines and crowds. CGTN's Paul Barber reports from London.
This is Trafalgar Square in the heart of London's West End, home to the iconic Nelson's Column and the National Gallery. In normal times, it would be packed with tourists from all over the world all year round. But visits from overseas dropped 73% last year. And with foreign travel restrictions still in place, it will be some time before the crowds return. So the UK and London especially are banking on domestic tourism to provide a shot in the arm to the industry this year instead. The pandemic led to a 64% drop in domestic tourism in the capital last year. So a new $8.5 million campaign called Let's Do London has been launched to remind Brits all around the country that they have a world-class megacity on their doorstep.
It's about throwing a showcase onto all the amazing content and things that are happening in London over the summer. So whether that's the theatres and new productions that are coming out, whether that's art exhibitions, whether that's pop-up experiences on the streets, or where we started this week is with our Let's Eat campaign. So that's all about the fabulous dining and restaurant and bar offerings in London. We were hit very badly. London is an international city, so we rely very heavily on international tourists coming in, and that has not happened for the last year. So 1 in 7 jobs in London is from the tourism and hospitality industry, so it has hit very badly. Most of our hotels have been closed. There's been nobody on retail. Our footfall in central London has been down by about 8%. So no, it's been tough, but I think what has happened is the industry has really come together during this lockdown, and they have created new, safe and hygienic ways of doing their attractions. They've rethought the logistics of how you walk through attractions and one-way systems. There's so many really innovative things that are going to come out of this that I think actually we will change, but it will be changed for the better.
More than 60 million COVID vaccinations have now been given out in the UK, and more than 22 million people have had 2 doses. And with news that the jabs seem to be providing good protection against the so-called India variant of the virus still spreading in parts of England, confidence is building that a full opening up of the country can still go ahead on June the 21st. And with better weather hopefully on the way, London's leading attractions could soon be bustling with British residents rediscovering their own capital. Paul Barber, CGTN, London.
Singapore's recently witnessed a surge in COVID cases, and that has triggered a tightening of pandemic restrictions. But the city-state's first quarter economic data was a lot better than expected. Here's CGTN's Mira Liu with the details.
Thanks to a stronger than expected growth in the manufacturing, biomedical and chemical sectors and a robust demand for exports, Singapore's economy grew at a much faster pace than expected in the first quarter this year. The GDP grew by 1.3% year on year in the first 3 months, surpassing estimates by the government as well as economists. However, with the recent spike in cases internally and the emergence of new variants externally, the Singapore's Ministry of Trade and Industry remained cautious and maintained its annual growth forecast between 4% and 6%. Earlier this month, Singapore tightened restrictions on social gatherings and dine-in at restaurants to contain a surge in community cases. It has also tightened border controls and increased restrictions on visitors from high-risk countries. We spoke to some economists this afternoon. They said that the first quarter performance could have led to an upgrade of the annual forecast to beyond 6% if not for these tightened measures. The full year forecast will now be reviewed again by the government in August when more clarity is expected on the vaccine rollout across the globe.
New regulations for live streaming e-commerce in China are taking effect today. Now, these rules were introduced by no less than 7 different government agencies, including the country's top cyberspace watchdog and market regulator. Here's CGTN's Huang Fei looking at what this all means for this huge but emerging industry on What's Hot tonight.
When it comes to on-screen chemistry, this couple knows best.
For the last year, they have turned their cute banter into a booming live streaming business, promoting products through Douyin, China's version of TikTok. Most of the brands they work with are from Hong Kong and Macau startups looking to connect with mainland consumers.
We believe live streaming has provided huge opportunities for good quality brands. We, as hosts, are a first and direct line to consumers. We can introduce, promote and sell, but only good brands will prevail in this business model. Without quality products, no live stream can bring repeat customers.
The young couple is part of the fast-growing live e-commerce industry in China, worth about $154 billion in 2020, according to a study by KPMG. The sector has given rise to superstar streamers like Via Huang and Austin Lee, who can garner tens of millions of dollars a year from product sales, advertising, and virtual gifts. But as the industry grows, so do calls for more oversight. Last year, one live streamer dubbed Simba was fined $140,000 for selling fake birds' nests, an expensive Chinese delicacy. The Cyber Administration of China said the latest rules will further crack down on fraud and create a blacklist to ban frequent violators. Under the new rules, both hosts and gift givers must provide their real names and social credit codes. The onus is on the platforms to verify those information and report regularly to local authorities. In said reports, they must note any celebrity and foreigner live streams and give a 2-week notice before any big online live selling activities. And for high-profile events, they'll need to hire professional moderators to ensure the content complies with the rules. The rules also put a spending cap on virtual tips and bans people under 16 from gifting altogether. This could curb a major revenue source for some platforms, such as short video app Kuaishou. Earlier this year, the Hong Kong-listed company warned investors in its IPO prospectus that intensified regulations could hamper their ability to grow and maintain user base. But experts say these curbs are necessary.
Without the guidance, people do lots of weird things, right? Like selling the live animals on the platform, like to provide some adult material content into platform. Now people will think seriously about what to do, right? Let's try to promote some agricultural products, promote some cultural products, which can, in the long term, will help the industry to grow bigger.
The couple is setting their sights on bigger opportunities outside the studio.
We want to make videos to show what the Greater Bay Area has to offer. What we wear and use during our journeys can be advertised in a more meaningful way.
Their vlogs have generated 30 million views on Douyin, where people can also place orders. The couple say they want to continue to build a trusting fan base that feels more like their extended family. CGTN, Guangzhou.
All right, then a quick update on commodity prices. It seems Brent crude is approaching $69 a barrel yet again. In fact, both Brent and WTI were up about 0.3% today, but takes the year-to-date rise so far to at least 33% and 37%, respectively. Copper continues to come off the highs we saw earlier in the month from $10,734 a ton hit on the 10th of May, down to around $9,980 today. Here's what's coming up next. Tunisia's top tourist attraction is bearing the brunt of the pandemic's damage. We'll have the details next. Welcome back. One last story for you in the hour. This one from Tunisia's history. The ancient El Jem Amphitheatre is one of the country's top attractions. It's also one of the largest and best preserved Roman amphitheatres in North Africa. It was designed to seat about 35,000 people. In the years since, well, centuries really, since it was being used to host gladiatorial combat, the theatre has now attracted hundreds of thousands of visitors from all over the world. But ever since the pandemic hit, businesses at the Colosseum that depend on tourist traffic are having a rather difficult time staying alive. CGTN's Alexander Majala has their stories on grassroots.
The El Jam Amphitheatre is a 3rd century structure so symbolic of Tunisia that it features on the 20 dinar note. The Colosseum usually receives about 190,000 visitors a year, but in 2020, only 45,000 came. So far, this year, it has been deserted most of the time, a sign that another tourist season is wrecked by COVID-19.
Of course, there is a great impact on the tourism sector. Can you imagine a person will have to close this shop for a month or two? Where will the money come from? And the government is absent. All the sectors are affected by this pandemic, and the most affected is the tourism sector.
Over the past 2 weeks, numbers have picked up a little after the government relaxed quarantine rules for package tours. The move is meant to salvage some foreign revenue from the summer high season, but the numbers are nowhere near where they were pre-pandemic.
This is our first day today, official first day. So we did a COVID test and I was negative, as I expected. Mexico is very open, Tunisia is very open. Like, these are some of the top destinations right now that are extremely open. And so for us that was important. Like, I didn't want to wear a mask being in the resort. So that was quite an important factor. So it seemed pretty much like one of the perfect places to go at this moment.
Tunisia, which is dependent on foreign help to obtain COVID-19 vaccines, is struggling with low stocks. The country has been allocated 4.3 million doses to the COVAX scheme for poorer countries, but only 670,000 of them have arrived. It has also received some other doses through a separate agreement with Pfizer. As a result, only 800,000 people out of its population of 11.6 million have been vaccinated so far. This means there's little prospect of reducing infection rates enough to lure numbers of visitors away from rival European destinations.
Yeah, we have to do more efforts on government level. We have to accelerate this vaccination campaign with the higher speed than now, and things will be more faster if we encourage people to get vaccinated, and if we provide vaccines as well. What is the biggest issue for the moment now.
But in the meantime, shifting their target audience and lobbying locals to explore Tunisia has become priority. Most tourists come to Tunisia for its long white beaches, ruined Roman cities, cork forests, medieval mosques, Star Wars film sets, and Saharan oases. But short vaccine supplies hamper efforts to vaccinate workers in the service industry. Tourism normally accounts for about a tenth of the economy. Its collapse after militants attacked a beach and a museum in 2015 caused an economic crisis, but the sector had been recovering before COVID-19 hit. Alexandria Majala for CGTN.
All right, then a quick run through the currencies for you. The South African rand continues with its steady incremental gains against the American dollar. 13.86 is a number we're looking at on the print at the moment. The Naira is interesting because essentially with today's announcement, what the CBN is basically saying is that we move from 4 different official rates and to just 3, because all official business, according to the CBN, is now being conducted at the NAFEX rate, which is now at around 410.47. Before that, they were essentially getting Naira at around 397 or so to the American dollar. Bitcoin, of course, does continue to get hammered. Land mining utilities saying they will either no longer offer services in mainland China or not add to existing capacity over there. Huawei, for example, has suspended mining capacity and trading services over there. Hashcow and BTC Top have all ceased all or part of the operations in the PRC as well. We'll keep tabs on developments in the crypto market and update you on the program. But that's it for tonight's edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen here in the last hour. Many ways to get your thoughts back to us. All of them are on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.